Good morning, Trinidad and Tobago, and welcome to the Bourse Report. We'll be back at it in terms of recapping and reviewing earnings reports of financial companies or public listed companies rather. And today we're taking a look at two major stalwarts of the banking sector, two local boys as it were, First Citizens Group Financial Holdings or FCGFH and Republic Financial Holdings Limited or RFHL. Now both groups would have reported increased earnings for the comparable periods the half year ended March 2022. Let's take a look at how they would have done and what investors can expect in the months ahead. Turning firstly to RFHL, well, for that half year period ended March 2022, the group would have reported an earnings per share figure of $4.46, up just around 6% from that $4.21 mark recorded in the prior comparable period of half year 2021. Some of the major drivers, a very modest increase in net interest income from 1.98 billion to just over 2 billion. Operating income overall, supported by other income, was up 3.2% from 2.89 billion to 2.986 billion. And operating profits overall up from 1.16 billion to just over 1.2 billion. Net profit attributable to equity holders or shareholders up from 687 to 728 million. When we take a look at some of the major operating income by segment generated by RFHL, we can see some positive trends. That very modest increase in net interest income, of course, mentioned as it continues to recover to pre-COVID levels, up from that 1.95 billion to 2.006 billion TT dollars there. The other major driver was other income, up just around 7.8% from $909 million to that $980 million mark on account of increased transaction volumes and transaction charges. So certainly RFHL, from an income perspective, heading in the right direction with overall operating income up by that 3.2% as mentioned. When we take a look at the contribution by geography to profit before tax as well, the diversification story is continuing to pay off for the group. However, there was a very major or significant recovery in the Trinidad and Tobago jurisdiction, traditionally RFHL's major operating jurisdiction, up just around 18% from 475.5 million to 562 odd million TT dollars. There was a contraction of some 40 odd percent in Barbados, however, from 125 to 73 million. This was offset by a 55 odd percent increase in the Eastern Caribbean region from 82.3 million to 127.8, with some noticeable gains in Guyana as well, up 10% to 99.7 million in terms of profit before tax contribution, as well as Ghana, which was up 7 odd percent from 81.7 to 87.4. Mild contraction in the Cayman Islands, down some 17% from 115 million to 95.6 million. So overall, some mixed performances in the non-Trinidad and Tobago operating jurisdictions, but overall that profit before tax increasing just around 7.5% for the group over the comparable periods. Now, at a price of $140, RFHL is trading at a price-to-earnings ratio of 16.9 times, which is below the banking sector average of 18.2 times. However, it is still trending above RFHL's own historical pre-COVID price-to-earnings multiples of that 13 to 14 time range, so a bit overvalued compared to its own historical multiples, but when compared to the current banking sector average, it seems to be offering a fair valuation. The group is also, or the stock rather, is paying a dividend yield on a trailing basis of 2.9% compared to the banking sector average of 2.5%. So on the basis of that geographical diversification, which seems to be working out for the group, fair valuations and the prospect of cautiously optimistic economic normalization over subsequent periods, Bourse is going to maintain a market weight ratio on RFHL for the time being. Turning quickly to First Citizens Group Financial Holdings, or FCGFH, we'll call them FCG for short in this segment. The group recorded earnings per share of $1.52, up 9.1% from that $1.21 recorded in the prior comparable period. Now, net interest income for the group, unlike RFHL, was actually down 4.7% from 759 to 723 million. Total net income was pretty much flat, down just a marginal 0.6%. From 1.067 billion to 1.06 billion. Overall profit after taxes, on account of a sharp reduction in impairment expenses net of recoveries, would have increased from 308 million to 335.2 million, or 8.8%. So certainly some good news in terms of perceived improving credit conditions through the eyes of FCG. Now, when we take a look at the profit before tax by segment contribution, no major changes with the exception of retail and corporate banking, which would have moved from 349 million in the half year of 2021 to its most recently concluded period, 456 million in half year 22. Certainly getting back to those, or heading in the right direction for those pre-COVID type performances in terms of contributions to PBT in that high 400 to close to $500 million contribution range. Now, now for investors, when we look at that bounce in earnings and compare it historically, we can see that the earnings per share of First Citizens Group is trending back towards those pre-COVID levels as well. That trailing EPS is of $2.75, pretty much in line with the half year 2018 and half year 2019 levels of that 262 to 279 range. From a multiples perspective, still a little bit expensive compared to those pre-COVID levels of around 12 to 13 times multiple. It's currently trading at that price to earnings range of 19.2 times, which means investors are paying a little bit more for every dollar of earnings generated by FCG at this point in time. Now, at that price of $52.74, well, as mentioned, FCG is trading at a 19.2 times multiple, in line or slightly above the banking sector average of 18.2 times, and offers investors a dividend yield of 2.3%, just below that dividend yield figure of the banking sector average of 2.5%. Now, with improving non-interest income, that the prospect of lower credit impairment losses in subsequent periods, a return to fair valuations, but cognizant of volatile financial markets, Bourse is going to upgrade its rating of FCG from an underweight to a market weight rating for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website, bourseinvestment.com, where all of our research is absolutely free, and you can catch us in today's business section of the Trinidad and Tobago Guardian newspaper. Until next week, have a very profitable week ahead, and see you next time on the Bourse Report.